Stop what you're doing. Seriously, if you own NVIDIA stock, or honestly, even if you just hold a standard S&P 500 index fund, you need to hear this full ecosystem breakdown. Welcome to this explainer, focused learners. So last week, I sat down and mapped out NVIDIA's latest earnings print right alongside their massive $18.4 billion venture capital portfolio, and guys, what I found completely shocked me. You have to forget about traditional hardware metrics for a minute. To really grasp the massive corporate architecture Jensen Huang has built, we have to look at how they're literally engineering their own demand. Today, we're diving deep into the mechanics of NVIDIA's absolute market dominance, and we are going way, way beyond just the hardware.
$81.6 billion. That is NVIDIA's staggering revenue for a single quarter, specifically Q1 of fiscal year 2027. To put that insane number into perspective, that single quarter of revenue is actually larger than the annual revenue of entire legacy tech industries. Now look, I know a lot of everyday retail investors are kind of terrified right now. There's this huge common fear floating around that you've already missed the easy money on the AI cycle, or that this whole thing is just a giant bubble waiting to pop. But stick with me, because by the end of this explainer, you're going to have a clear, actionable framework to understand if NVIDIA is just a massive value trap or if their economic moat is truly bulletproof. And that brings us to a really bold question we need to ask. Is NVIDIA just selling chips, or are they secretly buying up the entire AI industry right out from under us? Seriously, it helps to think of NVIDIA less like a traditional hardware manufacturer and a lot more like the central bank of the AI economy. They are essentially printing the essential currency, the raw compute power, that every single startup needs just to survive. We're going to do a deep dive into their financial and strategic playbook today to uncover exactly how they are engineering this relentless demand. Okay, let's really get into this. To understand the bedrock of their empire, we have to look at the sheer, mind-boggling scale of the demand driving all this. NVIDIA's CEO, Jensen Huang, recently put it like this: computing demand is growing exponentially. The agentic AI inflection point has arrived. What does that actually mean? Well, it means AI isn't just sitting there answering our questions anymore. It's acting as autonomous agents, actually doing the work for us. He pointed out that enterprise adoption of these AI agents is just skyrocketing, and customers are absolutely racing to invest in the data factories powering this new industrial revolution. This isn't just some regular server upgrade cycle, folks. It's a fundamental platform shift.
So let's start with part one, the $81 billion quarter.
Think about this massive 85% year-over-year leap to get to that $81.6 billion mark. And here is the absolute kicker, the thing that completely breaks traditional hardware business models. They're pulling this off while maintaining a 75% non-GAAP gross margin. 75%. That totally proves that ramping up the complex commercial production of their next-generation chips isn't diluting their profitability at all. They are generating just an unprecedented gushing river of cash flow right now.
So where exactly is all that cash coming from? Well, a whopping $75.2 billion of that quarterly revenue came purely from their data center segment. That is up 92% year over year. And this explosive growth is being driven almost entirely by the capital expenditures of hyperscalers. We're talking about tech giants like Microsoft, Google, Meta, and Amazon just pouring billions into AI infrastructure, and all those dollars are flowing right into NVIDIA's top line. To put that in context, this single data center line item is now larger than the entire revenue base that most of their semiconductor peers will report for the whole year.
All right, moving on to part two, expanding the hardware lead.
The thing about NVIDIA is they never just sit still. When you contrast their older Hopper platform with the brand new Blackwell and the upcoming Vera Rubin chips, the benchmark results are honestly staggering. Based on those results, the new Blackwell Ultra delivers up to 50 times better performance and a 35 times lower cost for agentic AI compared to the old Hopper platform. 35 times cheaper. When you deliver an order of magnitude lower cost per token like that, it makes it basically financial suicide for cloud providers to try and build on older, slower, or alternative architectures.
Now here is an absolutely crucial point we need to clear up, especially since it's a common pain point for investors right now. The bottleneck for NVIDIA is absolutely not demand, it's supply. Specifically, the holdup is at TSMC's CoWoS packaging facilities. That's the incredibly complex physical process of actually assembling and connecting these advanced chips together. Because of this extremely tight bottleneck, customer allocations are reportedly oversubscribed all the way through the back half of fiscal year 2027.
Literally everyone wants these chips, and they just physically cannot make them fast enough to clear the backlog. Let's jump into Part 3, Strategic AI Acquisitions.
If we walk through the timeline of their recent moves for a second, it perfectly reveals their playbook. NVIDIA knows that having the absolute best chip doesn't mean a thing if your network or your software layer is causing massive latency. So in 2020, they bought Mellanox for $7 billion just to completely own the data center networking layer. Then in 2023, they scooped up OmniML to help miniaturize machine learning apps. In 2024, they locked in a $700 million acquisition of Run AI, an Israeli startup with software that perfectly optimizes GPU workloads. And by late 2025, they entered this massive $20 billion agreement with Grok to license their low-latency tech. You see the pattern here? They are systematically buying up all the surrounding infrastructure to essentially lock developers tightly into their ecosystem.
And they aren't just stopping at the heavy hardware infrastructure either. Just look at their 2024 acquisitions of Shoreline for $100 million, Octo AI for $250 million, and BrevDev. These are companies completely focused on things like incident automation, generative AI tools, and helping developers find the cheapest GPU compute across various cloud providers. NVIDIA is making sure that no matter where a developer chooses to work, NVIDIA owns the tools that make managing those GPUs completely seamless. Basically, they're making absolutely sure developers have zero excuse to ever leave the NVIDIA walled garden.
Which brings us to Part 4, the NV circular economy.
This part brilliantly illustrates the absolute core of their genius. It's known as the circular financing model. And guys, this isn't just about getting traditional venture capital returns on a few successful startups. No, it's about engineering their own product demand. Here's how it works. NVIDIA invests massive amounts of capital into specialized cloud operators and foundational model builders. Those startups then turn right around and recycle that exact same capital back to NVIDIA by purchasing NVIDIA hardware and subscribing to their software platforms.
When you break down their recent top public stock holdings, you'll see they have a huge 51.6% weighting in Intel, which makes total sense for a unified infrastructure strategy. But look right below that. They have a 19.9% strategic position in CoreWeave, valued at over $3.6 billion. CoreWeave isn't just some random portfolio investment. They are a massive AI cloud capacity provider and a huge engine for NVIDIA GPU demand. To show you exactly how this plays out in the real world, in January 2026, NVIDIA invested $2 billion in cash into CoreWeave at $87.20 a share. CoreWeave, which operates as a primary deployment partner, is taking that capital and using it to accelerate the build-out of more than 5 gigawatts of AI-native factories by 2030. And those factories, they are entirely built on, you guessed it, NVIDIA GPUs. It is incredibly simple, but wildly effective. NVIDIA funds the customer, and the customer buys the product.
Finally, let's look at Part 5, the ultimate ecosystem lock-in.
Let's piece this all together and look at how this builds into just an unstoppable flywheel effect. Step 1. NVIDIA uses its massive cash reserves to fund AI startups through NVentures, giving them capital and VIP early access to hardware. Step 2. Because of this, these startups naturally build their entire foundation on NVIDIA's CUDA software platform, and they buy up NVIDIA GPUs. Step 3. NVIDIA takes the staggering profits from those hardware sales, remember that insane 75% gross margin we talked about, and uses it to acquire even more infrastructure and software companies. That just makes the CUDA ecosystem even more powerful. Before you know it, the switching costs for developers become absolutely insurmountable.
And the sheer pace of this is just breathtaking. By October 2025, NVIDIA's venture arm had participated in 50 different venture capital deals in a single year. That's a massive leap from previous years. They're rapidly and aggressively scaling their influence across cloud infrastructure startups, foundational models like Mistral and Cohere, and even physical AI and robotics companies. They're basically planting seeds across the entire future spectrum of the global economy.
Which leaves us with this final, provocative thought to ponder today. If essentially every major AI startup out there relies on NVIDIA's venture funding just to survive, uses NVIDIA's acquired software to run their models, and physically processes all their data on NVIDIA's hardware, is it actually possible for any competitor to step in and break this cycle? NVIDIA isn't just building chips anymore, folks. They are architecting the operating system of the future. Thank you so much for joining me on this explainer, focused learners. Keep questioning, keep analyzing, and I'll see you next time.